Me? Okay.
Hello, everyone, and welcome to our fourth and final session of the day, this one on emerging tech ecosystems, last but not least. I'm very pleased to be joined by Jonathan Woodward, who leads Azure in Central and Eastern Europe for Microsoft. We've got Ryan Smith joining us bright and early from the city of Las Vegas, and Dr. Nakima Staffelbauer, angel investor and founder of Frauenloop in Berlin. So, as we've heard in some of the earlier sessions, the pandemic is shifting the perspectives of investors, of talent, investors' perspectives shifting about where successful tech companies can be built. And I think talent shifting about where they actually want to do that. So we also saw in the keynote this morning, or earlier today, that some of the most exciting growth is happening in emerging hubs, not in Silicon Valley necessarily, not necessarily in New York, but in places like Central and Eastern Europe, or in Las Vegas. So to start us off, Jonathan, you cover Central and Eastern Europe for Microsoft, which was specifically highlighted. But what opportunity does Microsoft see in CE region? How come you're doing what you're doing?
Mm-hmm. So if I start by saying, so my role is like the chief operating officer of Azure. So I look after cloud end to end, for the whole of the 33 countries in Central Eastern Europe. And as I look at the ecosystem we're trying to build around the startups, and let's talk about the startup side, I really think about three things. Talent and skilling. I think that's probably one of the main things, and I heard that on the previous panel as well. Access to funding, which we'll probably talk around, and then access to the market, whether that's local or, more importantly today, more global in nature. And I'll talk about the first one, and then I'll hand back to you all. I think in CE, Microsoft has been in CE for 20, 25 years, so we've been here a while. And one of the key things that's in CE is that talent. So when we look at the number of developers that we have in CE, it's one of the top regions in the world. When we look at the STEM students in CE, there's a history of focusing on technology. So that pull through of highly technical and talented people that come through is super important. And I think then as that talent comes into the market, whether that's landing in enterprise customers, landing in multinationals that have centers in CE, or software houses, or then into startups, the big thing that we try and do is focus on that skilling. So we're not short of talent in CE. The big thing that we're focused on is driving the technology skilling into those communities. I'll pause there and pass back to you. I'll cover the other ones later on, I think.
Yeah, and for Central and Eastern Europe, UiPath has obviously been such a massive story this year, passing $35 billion valuation, having been founded in Romania. And I think that kind of success story is also really seems important for the region. Nakima, how important are those success stories for an ecosystem, both internally for the talent, but also externally in grabbing people's attention?
I think they're critical. I think that in terms of the story that a successful startup and a successful exit eventually tells is one that unfortunately has been very limited to, in the European context, investors. It's been limited to insiders. What we want is for those stories to be broadly shared and for more people to benefit, not just the founders and the C-levels, but also the employees and the people who are part of the early team that builds these successful companies, because that's what, at least the experiences that I've had in North America, that's what drives the broader interest from many more different sectors of society to get involved in this digital world and upskill and associate oneself with these types of companies and this industry.
And Ryan, in Las Vegas, you've got your own big success story, Zappos. I'm sure that was really important for the city.
Yeah, for sure. I mean, I think obviously everybody on this call and across the world knows Vegas for a very specific reason. And when we had an investor, an entrepreneur, an innovator like Tony Hsieh leave San Francisco and come launch Zappos and really scale Zappos in Vegas, it got a lot of people's attention. Because again, obviously historically Vegas has been known for the bright lights and the gaming and the hospitality. And as people started to question, well, what type of business actually does happen in Las Vegas outside of the Strip? And so that was really a catalyst for the city to capitalize on new innovation projects. I think it helped in the city's effort to get professional sports. We have the NFL in Las Vegas now. I actually traveled with the Las Vegas Raiders to London 2 years ago. And so I think the narrative is starting to change, and it was extremely important for someone like Tony, who's very respected in the community and the ecosystem, to plant his flag here in Vegas.
And John, do you think there's a sense that some of the big tech hubs are maybe overheating, and that maybe there are potentially bigger returns to be found in some of the other emerging ecosystems?
Yeah, I mean, as I look at CE, I think there is, we've got a real drive on, VCs now coming into CE. I think if we look over the previous years, that's been increasing. I think we've seen in 2021 a massive increase in VC investment. So we're starting to see the funds now come in. We've got the talent, and I think we're also starting to see the returns from those organizations. Yes, you mentioned UiPath. There's a whole bunch of other ones that are coming through as those unicorns. I think in CE we've had 10 or 20 those large organizations drive a huge portion of valuation. And I think we should be really looking at CE as that next digital hotspot. How can we really support where the talent is, where the funds are coming in, to drive that innovation? So Microsoft definitely looks at that way, in terms of that next, the next digital hotspot for innovation.
And Ryan, that means that you're competing with places like Central and Eastern Europe. So not just competing with the major hubs, but the emerging hubs as well. How do you go about that? Are you putting billboards on the side of highways in San Francisco?
That's a good question. The mayor of Miami obviously did that. We're aggressively recruiting. So it used to be in economic development, you actually recruited the company. Hey, we want this scale up company. We want this industry to cluster in a certain area. But with the pandemic and really, the new way people are going to be working, it's really attracting the worker, and then the company will come. So John mentioned these like hotbeds of talent. Well, Silicon Valley was birthed because basically Stanford merged with Hewlett-Packard. So you had this pipeline of knowledge from Stanford and this growing company in Hewlett-Packard. And then the trends in the United States, like if you look at, Austin, Texas, you have the University of Texas and you have Dell. Dell was really the anchor. And now there's this pipeline of technology talent that's coming out of UT. Boulder, Colorado is another place in the United States where that's happening. And you have University of Colorado. Google is now anchored in Boulder, and Denver is obviously trending towards becoming a tech ecosystem. So, but now that question has kind of reversed and saying, okay, if you can live anywhere and work for a big tech company, where do you want to live? Like, what is your quality of life look like? And that's why right now in the United States, like New York and San Francisco are losing. Like, you can barely live in San Francisco. I don't know if any of you guys have ever looked at housing prices in San Francisco, but the average house in San Francisco costs $1.5 million. If you take that same dollar amount and you move that to a place like, Vegas or some of the outskirts of Texas or even in Florida, like, you're living in a mansion. Like, it's not like, you're not in a condo or an apartment. So, people are obviously migrating out of those major areas, and every kind of what you would call tier 2 city is competing. And we're trying every way possible. I think Vegas, obviously, we have a lot of brand recognition, which is a double-edged sword for Vegas, because it's like, hey, I come to Vegas to party, or no, I'm actually going to live and run a business in Vegas. And there's this kind of period of time where that is starting to merge. And I feel like as new generations kind of come up, and the old school thinking of Vegas like mobsters, gambling, crime exits people's minds, it'll be like, oh yeah, like, you know, this is a digital economy. Who cares? Like, why wouldn't I be in Vegas? And sports betting is becoming legal everywhere in the United States. And there's going to be more casino licenses. So I think we'll be able to overcome that. And then that compiled with Vegas being such an international city, you know, we have CES, you know, 300,000 people come from all over the globe for CES. I'm sure there's people on this call that have been to CES. We have, you know, Elon Musk Boring Company that's doing the first boring tunnel under Las Vegas. You know, we had just yesterday, I posted that we had the first completely autonomous vehicle with commercial activity start driving in Las Vegas on the main roads, like zero driver in the car driving commercially. So I think Vegas is trending towards, when you think about Vegas, yes, you'll think about gaming and the bright lights, but innovation will start to creep into that thought. And as that does, I think Vegas is going to take off, and Vegas has a lot of room to grow too. It's a city that's only been around for 100 years. And so there's a lot of opportunity for growth in Las Vegas, where some of those other major hubs, potentially even in Europe, may be constrained a little bit. Like the only choice that, you know, there are for a lot of new, you know, housing opportunities is to go vertical, and people want to go horizontal right now. Like if you can live in a 5,000 square foot house and have a pool and have your own private office and private gym, and it costs the same as living in San Francisco, like what are you going to choose? So that's what, yes, we're competing, but I think we do have a distinct advantage in that regard.
And I think it's quite tempting to compare or want to compare ecosystems to each other, kind of like for like, and try and emulate the same kind of success that Silicon Valley has done before. But Nikki, I wonder, Berlin has created such an unique cultural identity as a startup hub. Should emerging ecosystems be trying to emulate what the other hubs have done, or kind of carve their own path? And what opportunities are there to do that? What could they potentially avoid some of the mistakes that some of the major hubs have made potentially?
So I first want to respond to some of the points that Ryan raised, because as a native New Yorker who just narrowly missed moving to Las Vegas at one point, I could definitely agree with his point as to the cost of living comparison that many people do, especially now in the wake of the pandemic and the decision by many big tech companies to be kind of location agnostic. It's absolutely true that you start to think about where is your quality of life going to be better. But for that reason, I would say that 8 years into living in Berlin, there are a lot of contacts, friends, you know, every week I'm in touch with people in North America who are asking about the European ecosystem, specifically Berlin. And they're asking about not only what is the quality of life, what can I get for my money there? They're also asking, you know, what makes it different? What makes it special? What can I expect from the companies, particularly startup companies that tend to be more open to hiring internationally and hiring internationals? So I would say in terms of copying a successful formula, that's not what I would like to see happen in Europe generally, but certainly not in Berlin, because we have a lot of things that are unique to this ecosystem, like worker rights, for example, and really strong data protections and some things that make it much more desirable as an innovator, as a young or a more experienced professional in the tech sector, certainly, to consider a life in this ecosystem and navigating within some clearer rules for conduct and hopefully a different idea of what success looks like. one of the things that I don't think we talk about enough in Silicon Valley is the idea that the Silicon Valley ideal of the few being successful and there being a real gap between how the successful live and what they can afford, and everyone else who's just working really hard trying to catch up. That divide doesn't need to be so stark, and I don't think that we have that stark of a divide in most of the European ecosystems. That's a good thing. To go back to my point about shared ownership and getting more people into the ownership economy, this was a big theme when Slack and when other Twilio and other companies went public years back. It's one of the things that, at least within the communities I'm connected to, which are communities of color, communities that are much more diverse than your standard Silicon Valley startup, people were talking about generational wealth being possible to build, to participate in, and some of the light bulbs went off that typically don't go off if you're outside of the tech ecosystem, for people who saw that this innovation economy is really changing the face of who is succeeding and what success looks like. So I would say we definitely have opportunities in Europe and in Berlin in particular to make use of the poor but sexy, the more egalitarian, the more fair and open and international reputation, to kind of build that into the ecosystems of the tech companies that decide to found companies here and to build up their teams here.
Right, and I think going back to John, your point about talent, I think there's long been an arms race for talent globally, and places like Central and Eastern Europe or India have been looked at as kind of a place that you can hire maybe an outsourcing team or something. But I think that's kind of changing, and potentially some of these hubs have a massive advantage over some of the more established ecosystems.
Yeah, and I think Nakima mentioned it correctly, that especially in and especially with COVID, I'd say with COVID, we've seen, especially in CE, all the talent that was around the world, many have come back into CE, and I think that has changed how the future of this ecosystem will evolve. Yes, in the past, people in CE saw their route to whether it's a startup or another company, was to go and work outside of CE. So they'd build their skills, they'd get their certification, they'd then look to export the skills in outside of CE. I think we've seen a massive shift. We've seen a massive shift, and a huge amount of talent has come back into CE, and they're looking at this ecosystem of how do I stay now in Central Eastern Europe, leverage my skills, and build that opportunity. Back to Nakima's point, looking to build their opportunity themselves, and build out that ecosystem, build out their own net worth and startup, rather than just exporting. So I think we're seeing a fairly big change in CE and probably around the world. I think that talent movement, where you don't now need to move to be part of this ecosystem. Whereas before, you'd move to Silicon Valley, you'd move to Boston, you'd move to London. We've now got the same number of startups in CE than London. We're bigger than Paris. So there is a huge opportunity now in Central Eastern Europe for people that have got the skill and got the talent to apply themselves into this ecosystem. So I think it's changed the face of worldwide ecosystem.
And we've just been joined by Daniel Glazer, I'm very pleased to say. So Daniel is a technology lawyer and business advisor at Wilson Sonsini, who had a few technical issues, but good to have you here. So Daniel, you're based on Old Street in London, which we can hardly describe as an emerging tech ecosystem. But things were quite different a decade ago, weren't they? What has the journey of London been like, and what can some of the other emerging hubs potentially learn from that rapid rise?
Sure thing. Thanks, Orla. And first of all, I apologize for this would be disruption in the bad way, showing up late like this. So thank you. So yeah, I mean, it is funny now to sort of think of London as one of the firmly established ecosystems. I mean, I remember starting to work with startups in London a decade ago when it was truly an emerging ecosystem. And one of my favorite statistics about London tech is that 10 years ago in 2010, which is the year that the government's Tech City initiative was launched to help scale the UK digital economy. The amount of venture capital invested into London technology companies was only $100 million for the entirety of 2010, and last year, for the entirety of 2020, it was 10.5 billion. So it really has gone from early emerging ecosystem to firmly established ecosystem, and one of the things that we've seen over the past decade that I think has really helped turbocharge that growth is, among other things, frankly, the role of government here has I think cannot be overstated, which is that the tax breaks, for example, that the UK government created with its enterprise investment scheme or its seed enterprise investment scheme, and with the so-called patent box to encourage investment, to encourage R&D. There's sort of R&D grants provided through the government's Innovate UK program. Frankly, the promotional impact of the UK government through Tech City and then Tech Nation and other organizations and trade missions to promote UK tech abroad, all helped build a culture where the UK tech ecosystem was seen as something that was growing and growing fast. And what it especially helped do, especially the tax breaks, was to create a strong seed ecosystem, seed investment ecosystem, which then led to better funded companies, which required a strong Series A ecosystem, which then led to a stronger growth stage ecosystem. And the better the companies were, the more then it brought in money from overseas. And you saw the American investors come in, and the Asian investors come in. And now you've got a fully functioning ecosystem where, as I often say, seed is local, A is national or regional, and B and beyond is global. And all three of those stages are well represented in London, in the UK, so that now if you are a strong company, you can get funded at all stages. But I think what ultimately helped kickstart that a bit was that government kickoff in 2010 through the Tech City initiative.
And Ryan, do you look at some of the things that other ecosystems have done like that, and do you try and emulate or that as a city?
So I'll say that, I mean, this call is obviously a global call, and I'll say that there's other countries in the world that could take advantage of kind of the political climate in terms of incentives in the United States. So when the Amazon deal happened in the US, all of a sudden incentives became very politicized in the US. And essentially, a company, when they make a decision on where to start up or where to locate, they're thinking of all these factors of what is going to give my company the best chance of success, long-term success. Maybe whatever their goals are. I want to have an exit. I want to be a $1 billion company. I want to be the next, billionaire. Whatever their goals are of the company, I want to change the world. Whatever that is, and they're looking for all these different elements of regulatory certainty. Talent, access to people, access to government, access to business, access to clients, efficiencies, and costs are also a factor in that decision matrix. And I can say that things like that really work. I personally actually cut Tesla $200 million of checks, essentially. There's no greater example in Northern Nevada, where the Gigafactory is for Tesla. Right now, they have 5% unemployment. In Southern Nevada, where our economy is completely reliant upon gaming, we have 15% unemployment. At the peak, we had 30% unemployment, the peak of the pandemic. In Northern Nevada, they had about 10. So, in terms of taking advantage of opportunities to really create environments for successful, whether the government's aiming for startups, whether they're aiming for large companies, whether they're aiming for manufacturing, to plant that flag like the UK did and that Daniel's mentioning and say, this is what we want. This is how we're going to get what we want because we've done the research. And then to actually see that unfold in like the later stages of, now you're getting, VC capital, Series A went from 100 million to, the billions that he mentioned, like that is the payback. And, to be honest, in the United States, incentives are very politicized. And so it will be really interesting to see how companies continue to migrate across the world where they feel like they have the best chance to succeed. So, I totally agree with Daniel.
So your company, Frauenloop, trains women immigrants and refugees in web development. And we also saw in the keynote earlier that BioNTech, which created the first COVID vaccine, was founded in Germany by a mixed gender immigrant founding team. I wonder, do you think that some of the next most successful emerging hubs could actually be the ones that are the most open, the ones that are inclusive and that people actually feel welcomed to go to, that they want to work in?
I believe that they have to be. I think that it's been proven time and again that diversity is not a nice to have or something that is an add-on or an afterthought. It's something that drives performance. It's something that drives financial returns. And it's something that drives everyone who takes it seriously from the outset to build better products, services, and communities than would otherwise be the case. So I'm not at all surprised that this breakthrough came from a company, BioNTech, that was founded by immigrants, women. The representation was not at all what we're used to seeing in traditional pharmaceutical companies. I also think that it's part and parcel of what I'm doing with Frauenloop, which is not only for web development training, it's also data analytics and data science and software automation and software manual testing. It's really trying to target those women with ability. In prior years, when I used to lead the Refugees on Rails program, it was men with the ability and the ambition to get involved in the cutting edge of different product and service development that was being digitalized. And it's basically trying to ensure that within the context of Europe, where we have already so much diversity, that we're lowering barriers to that diversity and we're making an equal playing field, essentially, for anyone with the talent to be part of building something big. In Berlin, we're here with Elon Musk's Gigafactory underway, any day ready to launch. This is the kind of mentality that would be great to have more of and to encourage amongst founders in the European space, that we think big and that we recruit internationally, or at least with an international mindset, because immigrants, refugees, women from various stages of life with various different life experience really means when you make environments that are welcoming to them, it really means that you're raising the bar and you're ensuring that you're getting top performers who are able to compete against anyone, and not just a limited profile of who typically in the past has been successful in certain industries or with certain kind of product development. So I absolutely think what I'm doing is kind of pushing forward that conversation with employers, with partners, that are looking to hire the best talent and to create environments that will retain that talent.
Great. Well, we are almost out of time, so I'm going to have one question that I'd like to ask all of you very briefly. So if you are an emerging tech hub, which some of you are based in, but what is number one on your wish list? Is it talent? Is it capital? Is it attention, government support? What moves the needle most? And anyone can jump in first.
So let me give a view from kind of the big multinational corporates, because I think that's one view. So we've spoke about the talent, we've spoken about the skilling. Two areas that I think are super important. We've mentioned a little bit about access to funding. So I think startups that are looking for funding, either through VCs or technology funding through corporates like Microsoft or AWS. There's programs available to provide that funding. But I think probably the biggest thing that would be useful for startups to think about would be access to the worldwide market. And if I could, if I was a startup today, yes, I'd be looking for funding. Yes, I'd be looking for the talent and looking for the right place to locate, whether that's Vegas or in London or in Berlin or Central Eastern Europe. But I'd also be looking for how can I leverage the big corporates to get the network once I've built my solution. And I think that's super important, that, there's not many big organizations out there that can give access to, the broad range worldwide. And if I was a startup, I'd be looking for those hubs, those ecosystems that are well connected to an ability to then get global reach. We're not building software anymore that sits within inside a country. We're building, global scale solutions.
Right, Daniel, a couple of words.
Sure. So a couple of words, I would say talent, but a very specific type of talent. So ultimately, for an ecosystem to be self-sustaining, you need to get the flywheel effect going, right? Companies are built, companies exit, those that exit and make particularly significant amount of money from it, for the management and then employees incentivized by equity, go on and create new companies or become investors. And the money gets reinvested into the ecosystem, rinse and repeat over and over and over again. And then after 60 years, you get Silicon Valley, right? And as someone who is in a previously emerging ecosystem that is now heading toward, let's say, the end, not the end, but the end of that flywheel cycle, or the cycle that begins that sort of beginning again, is talent in helping with an exit. Right? It is all unrealized gain in some respects until you get to the liquidity event, right? In other words, if you're a startup, there are kind of three true outcomes. If you from a VC standpoint: bankruptcy, M&A, or IPO. And ultimately, for an ecosystem to achieve its full potential, you need to have the talent there at all stages of growth, and then at the end. Right, and then for the exit to execute on the M&A and the IPO, and to get that flywheel effect going for future generations.
Great, Ryan, what's number one on your list?
I'd honestly say for us, it's coordination and intention, because I think that all the other examples you listed, we need to work on. But if we have coordination in terms of attracting talent, identifying the talent we have, attracting new talent, overcoming, which will then help with perception of what Las Vegas is, which will then, lead to more attention from the global market, and attention in terms of legislators to say, like, hey, like, we need to take action in our ecosystem to really explode what happens when you get organic growth and you get startup infrastructure that's successful, and Daniel knows firsthand what that looks like. So, I think Vegas is really unique. We still have those players that have deep roots, and politicians say they want to diversify the economy and do that stuff, but the juggernaut of Nevada is the gaming industry. So I would say, again, if we get those two things, all the other things will happen. And I think we're pretty early on in that.
And finally, Nikema.
I would say, surprisingly, government incentives. I would say that it's really critical that we fill the gap in terms of equity ownership. And if you still don't have much possibility as an early employee of a new startup company to gain significant equity and potentially have a successful exit that leads to some kind of shift in your status and your wealth, then we're not fully going to see this snowball effect that we want to see, or this flywheel. We're just seeing limited individuals profiting from this ownership economy. Also, I would say initiatives from government, regional EC initiatives that support emerging fund managers and diversification of the investment landscape, because this is booming all over North America at this point. You know, there are huge communities overlooked, underrepresented, underinvested in, and the only way to change this is to bring in new investors and get them looking at and investing in innovations that are specific to different areas and different communities. Until we have that, and as long as we don't have diversity of the types of people who are investing and getting that flywheel going, we're not going to see the kind of growth that is possible, I think.
Great. So here's your combined wish list then: global market access, exit talent, coordination, government incentives, and diversified investors, which I think is a pretty good starting point. We're going to have to wrap up there. Thank you so much to all you guys. And that wraps up our first day of this event on building tech ecosystems in a distributed world. Thank you to all the panelists we've had today across the 4 sessions. And a quick reminder, there is one more session tomorrow on measuring and growing tech ecosystems with Dealroom founder Joram Weingarde, Sarah Gamuri from Atomico, and Norbert Hermann from the Berlin Senate Department for Economics, Energy and Public Enterprises. That kicks off at 11 a.m. Central European time. But until then, thank you for joining us. Have a lovely rest of your day, whichever time zone you're in, and see you all soon. Thanks.